Hello everyone, welcome back to FX Street. My name is Akash and today we're taking a look at how to use the Fib tool to trade. It's basically a very simple strategy that you can use if you have the basic knowledge, the very basic knowledge of trading. Right, so before I actually get into what it is, please make sure to head on over to our YouTube channel and hit the subscribe button. And if you enjoyed the content that we put out almost every single day, make sure to click on this bell icon as well. You can give us a follow on Twitter at FXCrypto, and if you enjoy the content that I put out, make sure to give me a follow as well at Mangeko with a 0 at the end. Right, so take any coin that you want to trade. Let me before I give you an example, I want to use Bitcoin. Right, we're on a 4-hour time frame. Let's go back to this famous consolidation. Hold up. Yep, this is the consolidation. Right, so trading, right? It's really interesting how some things make a lot more sense if you look at it from a different perspective, right? The same kind of holds true for trading as well, right? Fibonacci tools are pretty widely or well-known tools that almost everybody's heard of, right? So you can use a very basic information about trading to successfully catch retracements. Like, the most important thing you have to understand is that you cannot catch any of these impulse moves, right? You might get lucky 1 or 2 times, but if you try to kind of go behind these pumps, it's likely that you're going to face more losses than wins, right? So that said, I want to talk about Fibonacci retracement levels and how you can utilize them to basically catch retracements of these impulse moves that you see here. So it's pretty simple, right? Let me just use my Fib tool, right? My Fib tool basically consists of 0, 1, 50. So the basics include 100%, 0, and there's the midpoint, basically, right? After this, you can add a couple more things here, which is the 62 retracement level, 70.5 and 79. So if you look at my Fib, these are my settings, right? There's 0, 1, 0.5. These are the 3 important stuff that I need to have. After that, you have 3 other aspects, which is 0.62, 0.75. There's 2 here. Okay, yeah, 0.62, 0.705, 0.79. Once you have these selected, you basically get this, right? So how do you use this? Basically find a swing point, swing low, and then find another swing high. Use a Fib tool from swing low to swing high, and bam, you're done. You get this, right? Another important thing that I have to mention is that when you use when I select a swing high, right, make sure that it is a higher high and not a lower high. So basically what I'm saying is, if you look at it, this was the swing high that was present. So this is the swing high, and then it produced a higher high around here, right? So say you are somewhere around here, right? Now that the price is produced, so this was the swing high, the price produced a higher high. Now you can't just blatantly use your Fib tool here and wait for the price to retrace down. You have to know when the trend is exhausted, right? You wait for the price to do whatever it wants to do, wait for things to play out as it is, right? So once the price, let me just let it play out. So once the price forms an absolute top and you feel like there is no way the price could head lower. So now there were 2 retests that try to go above this level here, 0.7831, but the price kind of failed to move above it. Now that there's a double top, it adds more credence that this could be a local top and the price is going to reverse now. So once you get this signal, you use a Fib extension and you draw, you can use this Fib tool. That's when you get this setup, right? And you wait for you don't do anything. You wait for the coin to retrace all the way down to any of these 3 levels here. Basically 0.62, 0.705, 0.79. Once it comes to this level, you buy basically. And the reason why these levels are important is because you have to understand what is premium, what is discount, right? So it's pretty simple, right? If you, let me just take Bitcoin for this example, right? Cool. So you wait for the price to form some sort of a range, right? Once you get this range, right? So once you have a range, right, you kind of have to know that the traders or the people that are buying and selling this coin basically feel like this is the where the price is kind of overpriced. That's why they sell and the price comes down. And this feels like a discounted discounted level, and this is where investors kind of tend to buy, right? So if I were to mark this out in colors, this is basically anything above 50% is 50% is a fair price. Anything above that is premium, and anything below that is discount, right? So when the price is above 50 retracement level here, it means that there is a lot of buyers, and that means these buyers are willing to pay a premium compared to the fair value, right? And when the price moves above the range limit here, the upper limit of the range, it indicates that it is extended its range and that it is unsustainable. At least when you know that the price is ranging, right? This becomes an overbought kind of level. If I were to explain it in RSI terms, that means that the price is going to reverse pretty soon, right? But when the price is below the 50% retracement level, it means that it is in a discount mode. So basically, the tool that I used, the fib tool that I used for what coin was that basically? Okay, so basically when I use my fib extensions, right, from here to here, you can see that there is 50 here, and anything below that is basically a discount. So when the price heads into this deep discount mode here, basically extending from 0.79 to 0.62, that's where the probability of reversals are extremely high. So that's how you use a fib extensions. And the most easiest way to trade is, say the price, let's take a random example, right? Let's take a look at this particular price swing, right? You wait, you use your fib extension, right? You formed a swing high, you wait for the price to retrace, it comes down, bounces to the 50 retracement level, but doesn't get into the deep discount mode. That's fine, you don't do anything, just wait for the price, goes up here, forms another swing high. Did it come down to deep discount mode? It does not. You don't do anything, wait for the price to go up, right? And then you wait for the price to come down, right? And as you can see here, the price retracement all the way down to the 70.5 retracement level here, which is for me, I think this is a really good point. The people that I've learned this from kind of find this as like the sweet spot. Basically 70.5 is the sweet spot, and that's where you kind of buy, right? And as you can see here, what's happened since then, since price entered the deep discount mode, there was not just one chance that was formed here on 7th March. There's another one on the 8th of March and another one on the 14th of March, right? If you just bought Bitcoin here and sold somewhere around here after this rally here, basically you would have made 9%. If you sold the top, which is unlikely, you could have made 14%, right? But if you'd held through all of this, right, say you bought here and you held through all of this, you wait for the price to go back to this level here, basically you would have made 20%, right? And as you can see here, the price eventually does this, right? Price comes down to 70.5, messes around a lot here, and then but eventually goes up, retests this level, blasts through it, sets a new swing high, and then comes down lower. So basically you have to find these setups. Right, now let's take a look at this particular swing. Let's take a look at this particular swing high. Price goes up, comes down to the 50 retracement level here. There's a lot of interest, price goes up, there's nothing here, ignore that. Let's take a look at these swing highs here. Price goes up, the price immediately retraces down, so there's nothing here, right? Say you had done this, So this is already over, right? You don't do anything. Then you wait for the price to form another swing high. Finally, it comes down to the deep discount mode here. You buy here, basically at 70.5, and you sell when the price goes above the range high. That is as simple as it can get. But I also have to mention that there are times where, say you wait for the price to do this, it tries to go above it, it doesn't, then it comes down. You buy the price at 70.5, right? And then the price fails to go all the way up to this level, but continues to go lower, right? There are chances this could happen as well. You could kind of mitigate this if you have an understanding of what the price is doing, technical analysis. But basically, if you were to just use the fib tool, you are bound to encounter a lot of losses as well. But that's where stop losses come into play. So basically what you can do is, say you enter a long position here, you put a stop loss at the range low, and then you book profits around here. Your entry gets triggered on the somewhere around here, which is on the 11th of November, but the price fails to go up, goes down, you hit stop loss. You don't do anything, you just get up, move on, right? That's one. But if I were to kind of add more stuff to this, I would take a look at what's happening here, right? So basically there was an impulse move that the price went up, failed to move above this. Now this is another classic signal that the trend is exhausted, right? And if you look at the RSI as well, right, the price is already in an oversold zone. And if you look at this, price formed a lower low. Okay, there's no divergence here, but either way, right, the price tried to move higher, and the RSI was already in the oversold zone, and the price had been rallying for quite some time here, basically from 29 September, but the price went from roughly $40,000 to $68,000. So this was basically an exaggeration of this rally. So trying to use the fib tool around here is basically a no-brainer, because as you can see on a 4-hour time frame, the RSI is oversold. On a daily time frame, also the RSI has formed a bearish divergence, as you can see here. Between this swing high here, it formed a higher high, but the RSI formed a lower low. So basically this was a trigger for the end of the rally, which led to a crash all the way down to 29K basically, or as you can see here, $32,000. So yep, that is the end of today's video. Basically a brief primer on how to use Fibonacci tool. Also, right before I end this, you can also use this on downswings. The only examples that I gave you were basically for uptrend. So let me just give you a quick example of downtrend. Say you take a look at this particular downswing, the price goes down, right? You extend this, price comes back into the 70.5, you short here, you book profits around here, right? Again, let's take an example of this here. Right, so basically you know that the trend, or the overall trend, is retracement, right? The overall trend is correcting, right? So what you do is wait for the price to go up, you get a swing high formed here, and then you wait for the price to come down, right? Say you were, even though the trend is a downtrend, you see you try to take advantage of the rallies because the price has produced higher high and you feel like the trend is shifting. Say you took this trade, price comes down 70.5, breaks through that, balances around here, tries to go up, it doesn't, right? Your stop loss is hit here, right? Your stop loss is hit. So what you do now is you reverse this thing, start from here, and you got your swing positions. You use the fib tools. Now what you do is you basically, hold up, I haven't used it properly. Right, now you wait for the price to go up to the sweet spot again here, 70.5, and then you short. So basically this is your setup. Right, and you short this. Okay, so the price did not go all the way up to 70.5. You don't do anything, you just wait. You move your fib again to the new swing low, This price still doesn't go up to the sweet spot here. Goes up, you still don't do anything. Just it. Still doesn't do anything. Okay, now it seems like the price is rising. Again, nothing. Right, so at this point, you kind of get to know that the price is not going all the way up to the 70.5 retracement level here. So now you try to find new rallies basically. So let's take a look at this particular downswing that you saw here. You formed a swing high, formed a swing low, right? And then yep, so basically we are here. Right, so now that you get this particular downswing, you use your fib extensions, you wait for the price to play out, price hits your sweet spot. This is where you shorted Bitcoin, and you kept the stop losses around here, your take profit around here. Now you wait for the price to retrace. And the price hits a stop loss and you're done. Right, now you wait for another swing to form. Okay, now we have another swing here. I'm just going to shift my fib from here to here. Right, now we have another one, so we'll place our entry around this point, stop loss this point, and my take profit this point. Let's see if it plays out. Okay, so the price failed to go all the way up to 70.5. Okay, it did. Now our orders filled, and our take profit is hit. Boom. Right, and now you wait for the price to form another swing low. Okay, now it looks like we do have our swing. This is the swing low. This is the next swing high. So what I do, I open a short position here, stop loss here, and my take profit around here. Right, you wait, see how the price goes up. Okay, the price doesn't continue, it continues to go lower. You wait for a definitive swing low to form. Okay, so basically this was the Luna crash, and now let's see what happens. Okay, so obviously at this point you will know that this trend has exhausted, so you just wait for a new swing to form. Okay, now I feel like this seems like a really good swing, so what I'm going to do is I'm going to adjust this point and this swing high here. Right, the price has already hit our entry point here, so I'm going to short Bitcoin here, stop loss here, take profit this level. Boom. Let's see how it goes. Rejected. Yep, orders filled. 70.5 again. Okay, our stop loss is hit here. Yep, our stop loss is hit, so you're out of the trade, right? So you suffer a loss. Now what you do, you wait for another proper downswing to form. You could use this one over here if you want. Do this, and then you wait for the price to come down to 70.5. Right, it hits 70.5, you book profits around here, boom, you're done. Another trade is done. Right, so basically now the opposite of it happens, right? You wait for the price to go up, you got an uptrend here, you use a fib again, you wait for the 70.5. Okay, we never get it because this is exactly what's happening right now with Bitcoin. Right, you can do this on a 4-hour time frame, you can do this on a 1-hour time frame, you can do it wherever you want. Right now I see another trade here. Right, you don't always have to wait for the price to hit 70.5. You can short here as well at 62 retracement level. Right, now the price is also exploring, right? You can use it on a 15-minute time frame as well, but if you go on a lower time frame, I do suggest that you have to pay attention to what's happening in the overall trend. If you're on a 5-minute time frame, you have to understand the resistance level that are present at least on a 4-hour time frame, at least up to 4-hour time frames. Perhaps up to 1 day would be fine. But yeah, so basically this is the end of today's discussion. If you enjoyed this, please make sure to like, comment, and subscribe.